Hello and welcome to this edition of the Video Market Analysis, weekly video market analysis in coordination with Orbex, and this is me, Jan.30 Al-Hamouri. In today's video, we will take a look, as always, at the upcoming economic releases and a look at our technical chart for some of the products. But first, let's explain the US dollar move in addition to the major events for or what are we watching for the week ahead. But the US dollar index basically kept on declining despite the fact that there were many economic figures throughout the week that came in much better than expected. However, and what's surprising is that US GDP and all of a sudden has slowed down all the way year over year toward 1.6%, which is the lowest growth rate since 2009. So the Federal Reserve basically spent trillions of dollars right after the financial crisis. They even cut the interest rates to zero, announced the QE, the reinvestments, tapered the QE, and even raised the rates twice again. And now they ended up with weak growth and accelerating inflation. I mean, what a great returns on investment is this? But for the time being, we will have to wait and watch in the coming months what will happen next. So traders here need to be very careful and very cautious again over the coming weeks, as Donald Trump for the time being, or the decisions of Donald Trump, seems to be the major driver of the market. Careful with his USD remarks, because he doesn't seem to like a strong dollar, and of course because he would like to start producing the products in the States and even export them outside, and he is basically moving the markets more than the Fed does. At the same time, keep an eye also on the company's statements and remarks regarding the latest developments, unfortunately, in the States, and whether if they will recall their global staff, as this should have an enormous impact globally on the markets and also on the global economy. As for the US dollar, and I guess, as I said before, I guess that the top might be in place already and the downside retracement is underway, but we still have to wait for confirmation if or whether the US dollar index will be able to break through the 100 barrier, which is a very strong support, and I don't think that will be very easy to be broken. But those are the things that I wanted to discuss at the beginning of the video, and now let's go and have a look at the fundamentals and the technicals for the week ahead. So starting with the economic calendar for this week, and as always, you can find it by going on Orbex.com website, and then you can go to online trading tools, and then you click on the economic calendar. So, beginning with the first day of the week, which is Monday, or late Sunday, beginning of Monday, we have the Chinese are still celebrating their New Year's throughout the week until Friday. So probably the Asian session will be a little bit boring during this week. However, we have some important economic releases will be released during the first Asian session, including the trade balance or the trade deficit in New Zealand. Estimates are quite a little bit good, but we're still looking for a deficit of minus 95 million, which is still which still could be the fifth monthly deficit in a row. However, the year over year is still way even lower. But exports are expected also to rise, but the imports are expected also to rise significantly. That's why we'll have the deficit looking to be higher. At the same time, in Japan, we'll be waiting for the retail sales, the year-over-year retail sales. Estimates are a little bit to show some sort of slowing down of 1.6% and 1.3% of the year-over-year, which is still some sort of it's not going to have any kind of an impact on the market, because at the end of the day, don't forget that it doesn't account the majority of the economy, and the Japanese economy is not driven by consumer spending. So looking at this week data, including Monday, as I said before, the Chinese New Year's is still ongoing, so therefore we might not see some huge movement during the Asian session, but going into the European session, we'll have another week of inflation data and also some GDP data, starting with the gross domestic product, or GDP, in Spain, which is expected again to show a growth rate of 0.7%, which is still stable for the time being, at least for the past quarter. For the past 3 quarters, we have seen the same growth rate, which is not bad. From Greece, of course, it's not going to have that big impact on the market, but consumer confidence in the Eurozone should be watched very carefully, especially that the European Central Bank is still looking to taper the QE by April of this year. In addition to that, more inflation data will be out from Germany from Germany on that day on Monday, which is another important data to look at, because last month we had a huge increase in the year-over-year consumer price index to 1.7. This was the highest level in the year-over-year CPI since almost like 3 years, which is a very big deal for the EU and Germany. And the estimates are to rise even further toward 2%, which is the ECB target. So cutting the or start cutting the QE or taper the QE would be definitely something reasonable to be done. As for the US session, also we have more data to come in during that session. Personal spending, personal income, pending home sales. We have the core personal consumption expenditure, which is the core PCE price index, which is one of the major inflation data that the Federal Reserve looks at, which is not the CPI, not the core CPI. The estimates remains at 1.6%. The Federal Reserve would like to see this above 2%, 2.1, or at least above 1.9%, but not above 2.2% to raise the rates even further. So any kind of slowing down would put the Federal Reserve again back into the wait-and-see mood before taking any further actions. As for the Asian session for Tuesday or Monday, late Monday, we'll be waiting for the Japanese unemployment rate. Estimates are still the same, 3.1 for the unemployment rate, unchanged. But at the same time, the overall household spending is expected to decline by 0.6%, which would be also the I guess the fifth or it's actually like 11th month of consecutive decline. So it's the whole year. Going into Tuesday, the European, or before that, we have the Bank of Japan monetary policy statement and Bank of Japan decision. Rates are expected to remain unchanged, but however, here you have to be careful. You have to be very careful, because for the past few weeks, since the ECB started talking about tapering, and the Federal Reserve is still talking about like tightening and increasing rates even further. But most importantly, the remarks from Donald Trump is very important, because again, Donald Trump is trying to kind of engage in a currency wars, especially after he said that the US dollar is very strong and it's killing us. That's why mainly the US dollar were declining for the past 2 weeks. So maybe the Bank of Japan will start even looking into more tools, especially that also the inflation in Japan is declining again to 2 years lows. So be careful with what the Bank of Japan would definitely say, especially if they hint for more tools to stimulate the economy. As for the European session, we have also more data, especially from Germany. We have the retail sales, GDP from France is very important to watch. Consumer or producer prices or consumer spending from France. More inflation data from Spain, which is another data to keep an eye on. Jobs report in Germany, which is still kind of stable, but still also the unemployment change is expected to keep on declining again by -4 or by 4,000. Unemployment rate in, unfortunately, Italy is still above 11.9. But most importantly, again, we will be waiting for the GDP for the Eurozone, which is one of the important data that you have to keep it in mind throughout the week and throughout this day, because better than expected, it shows that even the EU is growing maybe faster, like in a faster pace than the US for 2016, which is unpredictable, but whatever. Unemployment rate is expected also to stay in the Eurozone around 9.8, 9.7%. There's a lot of also odds that it might be even at 9.7%, 9.6%. So also keep an eye on this one. Consumer price index, inflation is very important. Estimates are clearly higher, 1.4% instead of 1.1%. This would be also very positive for the euro if this basically happened. As for the US session, we'll be waiting for just few economic figures, which is I'll be watching Chicago PMI and consumer confidence. And consumer confidence for the month of January, when Donald Trump actually took office. Later at night, there will be the unemployment rate or the jobs report from New Zealand, which is estimates are to remain kind of stable, 4.9% as for the unemployment rate. But at the same time, the employment rate is expected to rise by 0.8%. This should be kind of a good. But at the same time, here on Wednesday night or Thursday morning, this would be the beginning of the beginning of the first trading day in China. We'll be waiting for non-manufacturing PMI and the manufacturing PMI, which is not the non-official ones. 51.2 out of 51.4 is still stable, still very good for them. Like to stay within the range of 51 so far. But more importantly, we'll be waiting also for the non-monetary policy ECB meeting, which they'll show the accounts for the QE purchases in the next few, and they will give us also the estimates or the forecast of what they think is going to happen, which basically, the report includes economic forecast for EU member state over the next 2 years, which is a big thing also to watch. In addition to that, of course, we'll be waiting for manufacturing PMI from almost all of the EU, including also the UK, and this might have like a medium impact on the market. During the US session the same day, we'll be waiting more manufacturing PMI, construction spending, but more importantly, we'll be waiting for the Federal Reserve statement, which is, I don't think so the Federal Reserve will do anything in this meeting. No rate hike, no rate cuts, nothing. But we will need to wait and see what Janet Yellen is going to say about the dollar for the past few weeks decline. In addition to that, what her input about Dow Jones crossing through, breaking above 20,000, and whether if the Federal Reserve is worried about this high valuations or not. Thursday, we'll be waiting for building permits from Australia and the trade deficit, which is the trade balance, surplus, which is expected also to rise even further toward 2 billion. However, the building approvals is expected also to decline a little bit by 1%. But most importantly, during that day, we'll be waiting also for more data. And during the European session, we'll be waiting for the Bank of England decision, which is very important. No change, but don't forget that the UK economy is growing even at 0.6% higher than the estimates, which basically might change the votes here in terms of rate hike or rate cut, or even the purchases facility, especially that a lot of people say right now that the Bank of England were wrong about increasing QE, which is he basically increased it to 435 billion. As for the US session, as always on Thursday, jobless claims, we will be waiting also for non-farm productivity and the unit labor cost index. Most likely they will not have any major impact on the market, especially unless the productivity and the unit labor cost index, if it breaks above 2%, that will be something alarming for the Federal Reserve as well. The final day of the week, I'm not going to talk much about the European or even the Asian session. We're waiting manufacturing and services PMI data also from all over Europe and also China. But the most important, of course, event for that day will be the US jobs report, and this is very important because this is January data. This is when, or during the transition period of Obama and Donald Trump, which is very important to see what the businesses has done in return or after the elections. So keep an eye on this one. Unemployment rate is expected to remain stable at 4.7. And 165,000 new jobs is likely to be created, which is, I guess that it might be even lower than that, but it doesn't matter what I think, but we will trade what we see. That's it for the economical releases for this week. Let's turn into our technical charts, the one that we mentioned in our last week videos. As always, the chart is still the same. We haven't changed anything, and you can go back to the video and check it, but the euro went back down again after, as I said before, the technical indicators were higher and were crossing almost to the downside, which is we saw it at the end of the week. And this is of course because of the failure to break above 107.67 resistance level, and we already hit that back down almost to 106.95. However, the close was pretty good for me. I mean, it's not that bad, but we need to see some sort of another dip down or another dip, because dip by again. But so far we retraced about 23.6. I don't think so that I'm not going to exclude any of these, whether 50 or 38.2. So 105.55, 106.09, I guess, where buyers are likely to appear, especially above the 50-day moving average. So keep an eye on this one, especially that the trend also for the RSI is still positive. It's still above 50. So that's something to keep an eye on. So I still prefer the euro higher, especially if the inflation data came in much better, or comes in much better than expected in Germany and in the EU this week. The Japanese yen. I'm going to stay away of this one this week because it's a little bit confusing. So on the daily or the weekly chart, we're back above the 100-week moving average, the one that we mentioned it for the past few weeks. And in addition to that, we closed the week above the 15, and it's a bullish shooting star. So I guess it's still positive, but technical indicators are not really quite positive yet. So I would still wait and see what the Bank of Japan is going to say about it. At the same time, resistance area is still holding for the time being at 115, and we're slightly closed above the 50-day moving average, which is not confirmed yet. Technical indicators on the daily chart though looks pretty positive, but I still I'm gonna stay away of this one at least for another week and see what exactly the price action will be here before taking any more decision. British pound is still my favorite. As I said before, the Supreme Court decision to include the Parliament and the House of Representatives to vote on the Brexit vote, or to vote on the Brexit negotiation or the Brexit plan, is very important, and this is why we saw the British pound already went up all the way to 127 last week. And this is again because when the Parliament is involved, it will definitely take so much longer for them to accept or to vote the Brexit plan. Therefore, I believe that Brexit is not going to happen at least for 2 years minimum. At least for 2 years. So for the time being, a break above that level, and then we saw some sort of a retracement almost to 50 moving average. However, the key resistance area is still at the same levels, which is 27.37. This is a very key resistance. I don't think so that we're going to break above that level because the Bank of England is going to keep the pressure on sterling as much as possible for the time being, because again the businesses are kind of affected so far. Technical indicators are heavily overbought, so we definitely need to see some sort of retracement again in the next few days. Let's first go into gold. Let's look at silver first. Silver basically outperformed gold as always since the beginning of the year, which is something very important to keep an eye on. Technical indicators held already like in mid stochastic, and also the RSI is still positive. I still believe that silver has more room to go up in the next few days, in the next few weeks, maybe probably above, like even to test the 1740, and even also I wouldn't be excluding 1790s or even 80. But the outlook is still actually positive since the beginning of the year, despite the fact that we've seen that huge drop in during the end of last year. But it's still positive on silver. At the same time, gold it failed to close last week higher for the first time in 4 weeks. But again, this was after the double top that were created here during January, and then we broke even through the $1,200 and 1194, which basically opened the door for further declines ahead toward 1176, which is 50-day moving average, the one that I'll be looking forward to start buying again, or dip buy it again in the next few weeks. So those are the technicals, or the main technical for the FX and gold, silver. But the final thing, I'm going to stay away from the US equities. I'm not interested to trade them, even if they keeps on going like blindly up. I'm not going to touch it. Dow Jones is above 20,000 with no reasonable retracement so far. Technical indicators are heavily overbought, and they're very overbought. Like we're almost like 99 point something, and the RSI is just 72. It's just crazy, like, to start buying here at these levels, even if this looks like a breakout. Okay, I'm not actually interested in going into arguments about the US equities. It might go up forever, nobody knows, but this is not healthy. And don't forget that the EPS is for the US equities right now is at 28 times. I'm not interested to buy this. I'm going to stay away. I'm going to just keep on watching the US equities without even touching it. So those are the fundamentals and the technicals for the week. So this is it for the week, and as always, thank you for watching, and I would like to ask you again to watch, like, share the video, and if you have any questions, feedback, or maybe any comments, you can leave it below this video on YouTube. We'll see you once again next week. Have a good one.